Everything is changing in tech, innovation, and business. New launches, new playbooks, new power shifts every single day. This is Testardi, a snapshot of the news, ideas, and decisions shaping what comes next. Every episode, we break it down into what changed, what it means, and why it matters, so you can stay curious, but with a stubborn edge.
Welcome back. It's great to have you here in the new episode of Testardi. I'm your host Jonathan, and we are quite ready to see the latest with our February roundup. Early 2026 has that deja vu kind of feeling, but with a slight twist. Businesses going public conversations are back, artificial intelligence is still the loudest story in the room, and the big tech showcases are already shaping what everyone expects next. But the conditions around all of it are sharper now. Like the industry wants to move forward, and as a matter of fact, it is moving forward, but you can also see where some of the current constraints are starting to show up in the current tech industry. February felt like the month where a few big machines started turning. Companies are talking about going public again, deals are getting done, but most of it comes with very clear fine print. At the same time, the largest tech players are ramping up spending on AI infrastructure, not really on side projects, but thinking very long term industrial commitments. And in Europe, it's no longer draft documents and hypotheticals. The rules are starting to shape how teams actually build and ship products. Meanwhile, the big January events have been showing where hardware and robotics are headed. When you line those pieces up, the stories that are coming up get clearer, allowing us to connect a few dots. Right now, we are in this kind of middle zone where, after a couple of rough years, some IPOs, especially around new software on artificial intelligence, have done quite well. However, sometimes the market swings, and it reminds everyone that we can't just be swayed by every shiny new AI story. So the window isn't wide open, rather, it's guarded, it's filtered, as if we had some kind of new bouncer at the door of our club. When people talk about business IPOs or exits, they generally mean two things, right? One, a private company that sells shares to the public for the first time, which literally means going public. Two, a company gets acquired, either by a competitor or a bigger platform or a financial buyer. Now, exits per se aren't the news here. However, something has been changing recently, and that's the filter applied to IPOs. Because over the past weeks, multiple outlets, including the Financial Times and Bloomberg, have reported a string of not quite yet moments, including deals getting resized, timelines getting pushed, and some plans being pulled. We have strong examples, such as the ones like Clear Street or Visma, and most similar stories all revolving around being filed and having big buyout backed software companies that are hitting pause because the market isn't rewarding the sector the same way it used to. And the fact is that it looks like we are really in a scenario where buyers are giving green lights, yes, but only if certain new conditions are met. And these big ifs are basically a mix of the most frequent questions buyers keep asking, such as, is this a real business or a story that only works in ideal conditions? Is the plan coherent enough? And is it ready to withstand possible storms and not just, let's say, being visionary? Is the price fair compared to other alternatives? And is a workable version of the product ready, or is it still a Kickstarter proof of concept? And it changes how teams get evaluated as well. Less big vision and more prove it kind of scenario, or show me proof of what you're actually selling. You see, this is particularly important in this new year that is looking at AI with a different set of eyes, where if you reach a similar stage of your business idea, thinking, we'll fix the business model later, the bouncer at the door of the club will say, well, not anymore, as the market now demands clear plans for any AI related software and a believable path to profits. The bottom line is that the market is asking right now which of these companies are strong enough and compliant enough to get past this filter. Now, let's turn to the next page because if you have been listening to most conversations around artificial intelligence, it usually sounds like it's mainly all about the software race, am I right? Like new models, new agents, new apps, new features. But in the second part of last year, we clearly realized something else. It's also, or it's turning into, a capacity race. And when I say capacity, I mean the infrastructure, the physical layer that quietly decides which ideas are even possible. We are talking about data centers, chips, networking, cooling systems, and of course, electricity. As a matter of fact, the biggest tech companies in the world are heavily spending to try figuring out solutions around these more and more demanding constraints. In early 2026, analysts estimate Microsoft could approach 120 billions in capex this fiscal year alone, and most of that is pointed at AI and cloud infrastructures, like data centers and the network supporting them. And it's not just Microsoft. Bloomberg has reported that across the big cloud players, including also Amazon, Google, and Meta, the combined spending being discussed for 2026 is in the 600s of billions range, largely tied to data centers and AI capacity again. And it's not just we're buying some extra servers, rather, we are building power plants for the next wave of computing. Let's see if we can be very practical here. Think of a single AI prompt. Say you ask a model to write an email for you or summarize an article. Energy wise, that's roughly in the ballpark of running a microwave for a second or two. On its own, you don't notice it and it doesn't have that much of an impact nor consumption. But now scale that up way out of proportion. Multiply that by millions of prompts a day across all the apps and all the users all over the world. That's when AI starts to show up in electricity bills and forecasts, and that's why grid operators, especially in the US and Europe, are now flagging data centers as one of the fastest growing sources of power demand in their documents. This obviously costs money, and all of that money turns directly into the physical world, where in order to sustain a scaled up AI based business, you will need a few things, such as like power, a huge amount of electricity just to keep these sites running. Then you need land, like large spaces where you can actually construct these buildings. Then you need chips, GPUs, and custom built accelerators, and networking and cooling, of course, like the plumbing that keeps the data flowing and stops rack of machines from basically cooking themselves and turning into fried eggs. So, very practically, we move from an internet build out phase to an AI industrial build out phase. And that split shapes the cast of characters you normally see around AI. On one side, you've got the infrastructure players, the people building the data centers and selling cloud capacity. And using a real estate analogy, the angle is we are the landlord, everyone else can be a tenant on top of that. On the other side of the room, you've got the software companies, people building products. And investors look at them wanting to know whether these actually can make money at scale once you feed in the computer bill as well. So, to sum it up, you could potentially have a brilliant software feature or an idea that quietly turns into a big money loser the minute that adoption picks up, which means the advantage starts shifting away from who has the coolest demo in the room towards something much more stable, but also quite brutal, as defining who can keep the lights on without having their economics falling apart some point down the road. And this turns this whole conversation to access to computing power now equal access to scalability potential. So that's one side of the constraint story, capacity. The other side is rules, because while these companies are laying down all this infrastructure, governments, especially Europe, are drawing some lines here. The European Union Artificial Intelligence Act is the first major effort to regulate AI across an entire economic bloc with a single yet binding framework. And we are not just talking about best practices, it reflects a very specific policy approach. In the United States, for instance, there isn't one single AI law. It's more fragmented. Different industries get watched by different regulators and state rules that do not always match. In the United Kingdom, it's lighter, more principle based, with existing regulators applying shared guidelines rather than one big cross sector law. China has gone more targeted instead and directly introduced binding rules on specific categories like recommendation algorithms, deepfakes, and generative AI. But Europe is doing something different. A single overarching structure that cuts across sectors with phased timelines and enforceable obligations that can be seen from consumer facing applications to high risk systems in critical domains, and to general AI purpose as well. And while it was formally introduced in 2024, it actually rolls out in phases. Okay, very roughly. Based on the text and the Commission's published timelines, let's take a look at a bit of a breakdown. First, a small set of uses are simply off the table. The stuff that crosses the line into data manipulation, deception, or invasive surveillance. Second, the big general purpose models get obligations around transparency and documentation. Basically, more responsibility for what these systems can do and how incidents get handled. Third, the heavy requirements for high risk areas, healthcare tools, hiring systems, credit decisions, critical infrastructure, and all of those places where a wrong output or decision can seriously harm someone. So for any EU-based company, this translates into two big shifts. First, some categories are just off limits in Europe because they crossed the line. Second, there's a new emphasis on literacy and responsibility inside organizations. While it may sound like a buzzword, it really all is about defining who owns the risk. If your team is deploying or using AI systems, regulatory organs increasingly expect that people understand what the system is actually doing, know where it can go wrong, and know what they are not supposed to do in the first place. And there you have it. Now your infrastructure roadmap and your legal roadmap suddenly fall into the same kind of conversation. So, with all of that we just discussed in the background, we have one last stop to make, and that's Las Vegas, because this is where most of these threads meet: hardware, computing power, and the physical world implications. So, it's time to switch scenery and take a look at the Consumer Electronics Show. CES is essentially the tech industry's annual showcase. For a few days, thousands of companies pack into Las Vegas: hardware makers, car companies, chip designers, and a lot of startups, all gather there to say, here's what we have been cooking recently in order to shape the next couple of years. It's a show off of tens of thousands of products and concepts, and while I couldn't make my way over there, if something interesting gets presented, rest assured it will find its way into your feed whether you're looking for it or not. This year, the starting assumption was quite different. Everything was expected to have some kind of brain installed in it, and artificial intelligence is expected to start leaving the screen's boundaries. Looking at the conference through this lens, we've seen a focus on health devices, interactive building blocks, and little robots, not to mention the new NVIDIA hardware and innovative gaming concepts as well. Let's start with health, because this is where the upside actually feels more tangible. You walk past stands where all sorts of wearables track your sleep and recovery, your heart rates and stress levels, and the bathroom scale suddenly is talking to you about your body composition and so on. On the medical side, you're seeing a second set of eyes tools, systems that can help doctors interpret scans and catch details that are easy to miss. The common thread is that you can now measure an incredible amount of biometrics, sure, but do you have the time or the willingness to dig through all of that data and understand what it means for your well being? That's where the smart part quietly earns its place. In the background, there's a model watching your signals over time and doing the boring work. It learns what a normal baseline looks like for you, sending alerts when it starts to look off. Then you reach the more playful corners, dedicated to Lego and small robots as well. Lego has been pushing further into what they call a smart play. Instead of having all these static bricks, you now get pieces with small sensors, lights, and tiny speakers baked in. Picture this. You build a spaceship, you move it around, and the model responds with lights, sounds, and unlocking little story moments through an app reacting to what you do, adding basically some magic to the sets. However, what happens when those smart bricks leave the sets they were originally designed for? Right now, a lot of that behavior is tuned to specific builds. But what if you take a smart brick, drop it into a completely different build, and make it do something new or teach it new tricks? That contrast between open ended creativity and guided behavior is going to be fun to watch as the system mature, and it's curious to see what the community of builders will make out of it. In all of this, it's also inevitable to start noticing the hardware that's quietly sitting underneath. As in tech and around it, NVIDIA remains the heartbeat of AI hardware, providing high-end GPUs and chips that end up in PCs, gaming solutions, and platforms that support robotics, autopilots, and industrial automation. There's the silicon behind a lot of this reacts to you in real-time stories, leveraging videos, physics, and learned behavior, and making them run fast enough and feel natural. Basically, if something in this area moves smoothly and responds quickly, there's a very good chance an NVIDIA processor is somewhere in there. So the same hardware that makes your games run smoother might also be helping a hospital analyze scans in the future or powering a robot in a factory. And then there's Razer coming up with Project Ava. The idea is that your whole gaming setup becomes part of the performance through a virtual companion embedded into a physical holographic product. The eye-catching piece is a transparent display with bright graphics floating in the glass. I mean, we are still not quite there in having a full sci-fi hologram as you still have pixels and backlight and a visible mid-layer, but it does feel like the content has stepped off a flat rectangle. Part of what happens on the screen is in fact scripted, like the lighting, the overlays, and the different character choreographies. But Razer is clearly trying to make it feel less scripted, more like a companion that reacts in real time to what you're doing, what games you're playing, and what's happening on your main screen. Now, to wrap it all up, as always, we spent this episode looking at money, machines, rules, all moving at the same time, and how all this quietly changes what actually shows up in front of you, whether it's an IPO headline, a data center build out, or a health gadget on your wrist. If there's one interesting takeaway from February, is that the future of tech isn't just decided by who has the most clever idea, but also who has the ability to fund them, power them, or who can operate them inside the rules. Now, I'm generally curious to hear your thoughts on this. Are we going to see more cross industry regulations in more regions soon? And will the regulations making processes be fast enough to anticipate the ever changing tech needs? As always, I'd like to thank you for listening until the end of the episode. And if you found these topics interesting to you, you can follow, share, or comment with your take on your favorite channels, such as Spotify, Apple Podcasts, or LinkedIn. That's all for our February snapshot. I will see you in the next month, and I wish you a great rest of the day. Ciao!